And my next guest says the bank industry is well capitalized and calls the broad sell-off an opportunity for long-term investors. Let's bring in Fred Cummings of Elizabeth Capital Management to talk more about that. Fred, it's great to have you. So clearly, whenever you have banking stress, when you have institutions that fail and you have fast-moving deposit flight, people naturally are going to wonder just exactly how pervasive these issues are. How can you offer some assurance that, this is not going to be a game of waking up every day and finding some other bank or several banks in a similar position?
Well, first and foremost, investors and consumers need to understand that this is really a crisis of confidence. When you look at the fundamentals of the banking business, banks have near record levels of capital. They have very strong liquidity, and they're entering 2023 at record levels of profitability when you look at return on average assets. And more importantly, we've been in touch with a number of our portfolio companies, as well as listening to conference calls with managements across the country. And the message is the same. Their customers are not panicking. We are not hearing that the banks are experiencing outsized deposit outflows, and that gives us a reason to be optimistic. And I think once we get to earnings season, that same message will be communicated throughout, and that should help to restore confidence in the banking sector.
How do you treat, Fred, these estimates that now are making their way around, this new attention on sort of paper losses on the books of banks from longer duration fixed income securities and loans and things like that, and stress testing each bank in a sense on our own for whether they can get through this if forced to sell, because that seems to have been the game when people were panicking about these stocks.
Yes, indeed. And a number of people have talked about it. And I wanted really to address the misperceptions out there with regards to banks' inability to sell their available for sale security portfolio and remain well capitalized. We looked at the 127 banks that comprise the S&P Regional Bank Index. What we found was that if all of those banks sold their entire available for sale portfolio, only 9 would drop below the well-capitalized threshold of 7% common equity Tier 1 ratio. And so that's a relatively a low number, and that really speaks to the strength of the capital bases of these institutions. And more importantly, the banks are not going to have to liquidate these securities, particularly now that the Fed has structured that term, a lending facility. But that was a misperception on the part of a number of investors. And so we looked at the numbers, and that's the conclusion that we drew, that banks could easily sell their available for sale portfolio and remain well capitalized.
Well, I mean, we've had this little 2-day bounce in the sector, but the selling that led into it was just indiscriminate. So obviously, if you think that this is a more localized problem and most banks are healthy, which types of banks, I know you have a long-short strategy, are now attractive based on the punishment they've taken?
Yeah, well, we think there are a broad range of banks that are attractive. One of our favorites happens to be a bank in Texas Capital Bank. This is a $28 billion bank. They brought in new management in 2021, and he's transforming their culture from a wholesale bank to a relationship bank, and we think that stock's going to do very well. We also like Banner Corporation in Washington State. This is a company that's focused on internal profitability improvement. They have a great deposit franchise, and they have very low credit risk. The same can be said for East West Bancorp, which happens to be one of the most profitable banks in the country, posting a 2% return on average assets. They, too, have a great deposit franchise, and it's a very well-managed institution. And then I would also add that we like a small bank here in Ohio, People's Bank Corporation. This is one of the few banks that's been able to do accretive acquisitions over the last 9 months, and they have great earnings visibility as we look out to 2023. But fundamentally, types of banks that we are attracted to have strong capital bases, have very attractive deposit franchises, and we think that very low credit risk. And that's going to be the next focus area for many investors, given the fact that the economy is expected to slow in
Sure.
coming